Alrighty, good evening. Tonight we're going to be giving a technical analysis of Shll for July 9th, 2020. And basically this is another electric car slash truck company. It specializes in electric trucks. And we're basically going to be talking about a little bit of investing and fundamentals of the company, but mostly about the technicals for tomorrow and next week. So be sure to pay attention to these levels I'm about to give out to you if you're in Shll. Okay? So these electric cars slash electric truck companies are popping up like cockroaches, like literally popping up. So that's not bad though. I hate gas cars, hate gas trucks. Like, why do we even have them if there's companies like Tesla out right now? But that's besides the point. It's a company that sells other electric products like electric batteries and stuff like that. So the name is Tortoise Acquisition Group, but I believe that they're trying to go through a merger with Shll. So watch out for the ticker symbol. The ticker symbol might be changing in the near future. And so basically, let's talk about a little bit about investing in this company. I mean, where is it going to go? Is it going to go to the moon? Is it going to turn into Tesla? Is it going to $3,000 a share? Who knows? But basically, the fundamentals are saying that based on the balance sheet, they're forecasting to actually turn a profit in 2021. And this is really good because when we invest our money, you're taking a part ownership in that company. So if you're taking a part ownership in that company, you're going to share both the successes and drawdowns in the company. So we want to invest in companies that make money. Think about Facebook, think about Amazon, think about Microsoft. They make a ton of money. Look at their share prices today. They're paying out their investors and they're enjoying the party. So, and another thing about Shll is that on the balance sheet, they don't have really any debt. So that's really good. If their company doesn't have debt, stock price might can hold up a bit stronger because they don't have those obligations along with them. But another thing to think about when we're investing is think about moat. Now think of like a moat. This is something I learned in my investing course at Hamline University, is that basically think about the moat. Think of a moat. It's like, think of the olden days where there's like, castles and there's alligators and stuff. You can't get through that moat. It's very tough to get through. And I think it might have a narrow moat, meaning Tesla, think about something like the company Tesla. They're so far ahead in the electric vehicle industry. Like they're arguably over 10 years ahead of the rest of the industry. And so if you're interested in Shll, think about, do you think it can beat Tesla or at least rival with Tesla, steal some market share from Tesla? If so, then there you go. The investment might be worth it to you. So you could go risk the amount that you're willing to risk in the long run. But basically, you want to invest in companies with wide moats that you believe at least will have wide moats if they don't now. Like think about Amazon. Amazon has the widest moat in e-commerce. Amazon is performing amazingly, just all-time highs every single day. So that's basically the investing side of things. Think about the fundamentals. Think about the moat. Think about what you want. So let's get into the technical analysis portion of the video. So basically, Shell just a couple weeks ago, was at $13 a share, then had a huge push up, 53%. When people are up 53%, they're probably going to sell a little bit. Stocks breathe. And look, you had a lower risk entry right here at $15. Once we put in the pivot, we put in a hammer candle. We had a nice gap up. And then look, massive breakout. We broke the previous pivot high. Huge push up. This is a nice push, nice technical breakout on high volume. That's exactly what you see. When you see the high volume, that indicates, okay, there's actual buying strength behind this move, and it's likely to have huge follow through that day. So look at this, just from $20 to $25, there's another 28%. And what we did was, from that, we extended even higher the next day, and we got a little bit parabolic. Remember, you don't want to be buying on such huge gap ups. You're putting it yourself at such risk to a massive gap down. I mean, the next day it was gapping down and it fell like a good 23%. So It's very risky to buy the highs, which is why we want to wait for a pullback or a consolidation range. So right now, we're in a consolidation range, and arguably this choppy bull flag. I mean, here's your flag, and here's the pull. The big move up creates the pull. Here's our flag, nice tight consolidation range, although this isn't tight. This is a pretty volatile range of about 20 to 30% within this range. But notice how it's happening on declining volume. That's exactly what you want to see. And that's why I'm so excited to cover this, because this is a great setup that could trigger tomorrow or Monday, sometime next week. And the reason for that is because when we're getting coiled up like this, it's like a game of tug of war. There's buyers fighting at the lows. There's sellers at the highs. We're making higher lows. We're making lower highs. Somebody's got to give way at some point, and we're getting right to the end of the triangle, which means one way is going to give up. Who's going to win the game of tug of war? Which team is going to pull the rope and pull the other team in? So basically, when we're looking at the intraday chart, basically to see a move up, getting above today's high, and today's high is about the 28.35 level. It should give a sizable pop. So watch that 28.35 level. If we could get a nice pop and hold, so if we pop above it and we hold it, prove it as support, then we can see the next few levels, which the next levels will be 29, 30, and then 32. So that kind of just marks all these different pivots, but the move should be explosive because there will be short sellers in here ready to trap it, that are trapped, and will have to buy to cover. Buying begets buying. Momentum will push it up higher. So watch the levels 28.35, 29, 30 is the psychological hold number. There's usually always resistance coming from the bottom side up to 30. So watch out for that. And then lastly, 32. This is a pretty wide range and could be a good supply zone. So expect some resistance. Don't expect it to just waltz right through the old highs and go off to $100 a share. So old highs will be overhead resistance, at least on the first go around. At least some kind of pullback. Not 9 times out of 10, you'll see some kind of pullback, whether it be small or big. So watch out if it starts getting up there and pops that level. I doubt we'll see all-time highs tomorrow, but keep an eye out for if we start. And we'll talk about this a little bit later about how a stock hits a level that can tell you or give you an indication of what's the next higher probability move based on how it reacts and hits a resistance. But so we talked about the bull side. Watch for the pop of today's high. If we can get above today's high, watch out for these levels, 29, 30, and 32. And then watch. And so that's the upside case. So for the downside, let's say we gap down, or let's say we start rolling over. Let's say we start hitting these numbers. So watch out for $26 a share. Obviously, that's a pretty important daily pivot from here. It's kind of like a little bit of the midpoint of the range. So watch $26 a share. Watch $25.75. If that breaks, that's only 25 cents below. And if we start closing hourly belows, that means pull up your hour chart. And the longer it's below a level, the more likely it is to test the next level. Think of it like a video game. Once it gets below a level and it can't get above that level, you gotta bump down to an easier level. The easier level after that will be the $23 a share. So whole numbers are always usually some type of reactionary bounce. It can stop short and then bounce and come back up. Watch the $22.75 area, and then it would be really bad news for SHLL if it got below that level of $22.75 and couldn't get above and starts closing hourly below. We could see another leg down. Okay, so be careful. Be sure to manage risk if you can't afford a drawdown like that. And then let's check the yearly chart. After that, we've got this important pivot because this is the low of the recent 2-day bounce. So yeah, that's the level that we want to hold. And then watch this. Markets love to test former breakout and breakdown areas. This was a breakout area. So this breakout area is about $20 a share. If you wanna talk about pennies, it's like 1977. So that would be next up on the downside, and you'd want that level to hold. Generally, if SHL is getting below 20, it's bad news. Bad news. We could see a much larger drop. Look at these supports. It might fill the gap at 1776. It could come down all the way at 13.2, and at that point, it'll take a lot of work to get back up. And you might not want to bag hold this name if that happens to be the case. Okay, so watch those levels, and let's talk about how they get to those levels. So if we get to a resistance, and then we bounce, and then we drop sharply, that shows that that level is really important, and that could be a reversal. If we hit the level, these resistance that I pointed out, and we get a small drop, and we just start hanging out for a cup of coffee, that means it might not be final destination, and we could pop through. This could be on a 1-minute chart, it could be on a 5-minute chart, it could be on an hourly chart. You want it staying near to the resistance level if you want it to clear that resistance level. And same goes for the downside. If you see it hit support and then do an immediate bounce, then that shows that that level is important and that this could be the reversal. Once you see a sharp bounce, you know to place your stop loss just below that sharp bounce. But if we hit support and then we start hanging out, weak bounce, and then we start hanging out for a cup of coffee, that is bad news, and we could drop. It's because that's how bear flags and bull flags are formed. So SHLL, I like that they're green and looking forward to the future for a company like this. I might nibble some shares if we get the technical catalyst. I mean, I'm going to be setting an alert above 28.35. And I'm going to be watching it and see if the price action meets my demands for a small investment and maybe a day trade or a swing trade with minimal risk. Alrighty, let me know if you have any questions, comments, concerns, or want me to break down another stock. All right, see ya.